Hey taxpayers, it's Tiffany Gonzalez, CPA here, founder and CEO of Accounting to Scale. And today I want to talk to you about the 9 factors that the IRS uses in order to determine if your business is actually a hobby. This video is super important for any taxpayer that uses a side business as a means for tax deductions. You see, a business can have a loss that can help offset other income, but a hobby cannot deduct losses. In fact, a hobby can only deduct expenses up to the extent of hobby income. So essentially, you can't go below 0. When a business has a loss, specifically a Schedule C business, this is something that maybe you haven't necessarily incorporated, a side hustle, or maybe you're a single member LLC, the IRS is looking to see 9 different factors in order to determine whether or not it truly is a business. So let's jump right into it with factor number 1, the manner in which the taxpayer conducts the activity. The IRS is trying to see if you conduct the business in a business-like manner. In other words, do you keep separate books and records for your business? Factor number 2, the taxpayer's expertise. The business operator should have extensive knowledge or background within the sphere or industry that they're working in. For example, if someone's normal job is in tech, they wouldn't necessarily have a plumbing side hustle unless they had some sort of plumbing license. The third factor is the taxpayer's time and effort in carrying out the activity. In other words, is the taxpayer even able to devote enough time and effort to make this an operational business? The fourth factor, an expectation that any assets that have been purchased by this business will appreciate in value. Think land or equipment, etc. 5, the taxpayer's success in other types of activities similar to this one. So maybe this particular business isn't profitable, but the taxpayer has another business that is similar that is profitable. 6, the taxpayer's history of losses in this activity. You see, when a business has losses for a significant amount of time, it warrants the IRS to consider whether this is actually a business that the taxpayer will eventually bring to a profit. At some point, sustained profits are important to demonstrate that this is a for-profit activity. Factor 7, this is the amount of the occasional profit that is earned. In other words, the IRS isn't just looking for you to make a profit, they're looking to see how much profit you're actually making. Generally, if an activity has income from 3 of the last 5 years, it is generally presumed to be a for-profit activity. 8, the taxpayer's financial status. For example, if while you're operating your business, you're not necessarily earning earnings from any other source, then it could typically be perceived that your financial status is heavily reliant upon this activity being a for-profit activity. And factor number 9, the IRS is looking to see if this business is providing some sort of recreation or personal motive for the taxpayer. For example, if your side business is chartering your own boat, there is some recreation aspect or personal motives to deducting boat expenses. So in summary, the IRS does not have a single factor or focus when they are determining whether or not this activity is a hobby or a business. They have these 9 different factors. And so as a taxpayer, you should be looking at the same 9 factors in order to ensure that your business will never be questioned as a hobby. As always, if you have any questions about your business or tax liabilities, you can always call us here at Accounting to Scale. Hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.